Next up is Truworths, which incorporates the Truworths Man, YDE, Identity, and Daniel Hechter brands. It has a market cap of 39.2 billion rand, a dividend yield of 4.4%, and a price to earnings ratio of 15.9. Now, Truworths is a different model because it's very much based on credit sales. I think it's about 70%.
71%.
On credits. So that's a different model entirely, because Mr. Price is about 80% cash. Woolworths is also a similar ratio.
Yeah.
What's the difference in terms of, an investor's perspective?
Okay, ironically, this hasn't changed much in the last decade. So regardless of where we are in the credit cycle, they still sell a lot of clothes on credit, and that's always been the model. So you're obviously going to take pain when the credit cycle turns down. You were telling me on the way here, yes, we came in one car, that something around 15% of people can't buy on their cards anymore because things are not looking so good. So
that's a decent number for them. They boasted about that in their results presentation.
Exactly.
That 85% of current card holders would be allowed to purchase more on their Truworths cards. I don't know, I just get the feeling, and obviously I'm not criticizing the business model, but Truworths do attract a bit of a premium in terms of price for their clothing. If you can't afford to buy your clothing in cash, I don't think you should be buying premium type clothing anyways and buying it on credit. But it is a great business model because, of course, you're selling that stuff on credit. So not only are you getting the money for the price of the goods, but once it reaches that 6-month limit or whatever, you start charging interest on it.
Exactly.
And you're actually getting more than what's on the price tag.
Exactly. I don't think that the merchandise is terrible. The merchandise is great. Again, like everybody, they've managed to attract a new LSM as South Africans move through the middle income groups, and who doesn't love a retail experience? I think we've got to separate whether or not it's a good investment or whether or not it's a good business, and that's the tricky part.
Sometimes I feel like their buying's a bit off. They're almost buying and bringing in the stuff that Mr. Price brought in the year before. I feel like my grand shops there more often than my friends, my peers.
That's unfair. Come on. I mean, some of their brands are pretty hip and pretty happening, I would say, from where I sit.
In Morrow's Arch, you walk right past the Truworths to the Woolworths, and you don't buy anything from there.
I'm very sorry, Truworths.
Are you hot or are you not?
Byron, I think in terms of being able to separate the two. It is the cheapest
of the retailers in terms of fundamentals.
But it's the one with the least revenue growth out of all of them. So at this point in the credit cycle, even though people are repairing their own personal balance sheets, I'd probably take it. I can't say lukewarm, so either hot or not, I'm going to have to say not.
When you look at the share price, you see it has had a little bit of a recovery, but I think I agree with you on that. I'm not going to be hot on Truworths.